Hi, I'm Dustin Miller. Let's talk about what happened in Victoria real estate in the month of October. Well, Bill 35 put a big hit in the downtown condo market, Short-Term Accommodation Act. Compound that with high interest rates, and we saw the slowest month in over a decade. Sales volumes and prices are on the decline, and many indicators are showing either a balanced or buyer's market. So let's get into some of the details. So let's start with the macroeconomic update. The Bank of Canada held its key overnight policy rate at 5%. This is the second time the bank has held the rate steady at 5%. So good news in terms of stability. I felt during the month a lot of buyers were quite anxious and waiting for the results of the October 25th announcement to come out. The next announcement is scheduled for December 6th. Keep a close eye on that. And I think this high interest rate has taken its toll on the market. Affordability is very challenging unless you have significant down payment or double high incomes. We saw the reality of the high interest rates take a toll on sales volume in October. It was the slowest October in over a decade. So let's get into sales volume and pricing. Before we get into the condo market update, let's talk about Bill 35, the Short-Term Accommodation Act, which was announced on October 16th and came to quite a shock to all the Airbnb owners and operators across the province. There's going to be a principal residency requirement in that you must ordinarily reside in that property and only rent out not more than one room or one portion of the property, for example, a basement suite or a detached carriage house in the backyard. Another big shock that came in was the removal of the legal non-conforming clause, in which there's over 22 buildings in the city of Victoria that rely on this legal grandfathering clause. City of Victoria banned Airbnb back in 2018 by way of bylaw, but a number of these buildings were grandfathered in and allowed to continue to operate as Airbnbs, and that has just flourished in these buildings, but that will be no more as of May 1st, 2024. So what was the result? Well, a lot of these folks have now decided to sell their units, or they have the option of going to the long-term rental market. But in many cases, the long-term rents just don't bring in the same revenue as a short-term rental would. And if your property can't cash flow or break even with a long-term tenant, those owners are choosing to sell. As of this morning, there's about 68 of these units on the market. So it has brought an influx of listings to the downtown condo market. So in terms of the condo market, and we're not just talking Airbnbs anymore, we're talking about all condos. Median prices were down 3.4% compared to the previous month. The median price right now is sitting at $540,000, with the average condo sitting around $616,500. This segment of the market remained relatively flat all year, but I'm noticing it is trending downward, and I would say we are in a buyer's market for condos. And we will continue to do so for the foreseeable future, especially with this one-time injection of Airbnb units coming to the market. For single-family homes, prices also declined about 7% on the median, with the median price coming in at $1,125,000. This is quite a bit lower when we are approaching 1.25 and even 1.3 at the peak of the market about 2 years ago. Prices have declined. Sales volume down about 14% in this segment, so it is going slow. I'm still noticing well-priced, well-positioned single-family homes that are attractive, priced at $1 million or less, are still gathering quite a bit of interest. But other than that, it's slow going out there. So in the overall market, all product types, all locations in Greater Victoria, active inventory is up. There's about 2,756 listings at the end of October, which is up about 26% compared to the same time last year. I suspect we will surpass 3,000 listings heading into the winter, which will mean a lot more options for buyers. Still relatively low amount of inventory historically, but something that we haven't seen in quite a number of years. In terms of months of inventory, we're sitting at 6.4 So sitting in a balanced market in that sense. The sales to new listing ratio is coming in at 37%. So that means only roughly 1 in 3 homes that are listed in a given month are going to sell. I find this to be a more reliable indicator of current market conditions. Another common indicator is the sales to active listing ratio, which is coming in at a dim 8%. So pretty low. Our inventory is starting to build month to month, and listings are rolling over and sitting on the market longer. So thanks for joining me for my market update this month. My name is Dustin Miller, managing broker at 8X Real Estate. If you are considering buying or selling in the current market, I'd welcome the opportunity to chat with you. Feel free to come by my office at 535 Pandora. Would love to make you a coffee. Thanks for watching. Talk to you soon.